Hey, welcome to the Closing Beat, everybody. Happy Monday out there. How you doing? Did you have a good weekend? All is good? I don't know if you can see, but a bit of a rough weekend there. Took a paw to the schnoz, man. I was trying to teach the dog how to drum. You can teach him to shake, right? I was like, well, if I could teach him to shake with the other hand, then I could teach him to pat his hands. And, it kind of worked, but, the little booger got me in the face, so... It's going to be like that for a little bit. Could have been worse. I got a very large dog, so I'm thankful that it was just the little nails there. Hope you had a little bit better weekend, and all is good with you. Welcome back. We are financial advisors here at Jazz Wealth, 100% fiduciary, SEC registered. Small fish in a big pond, essentially, is what I'm trying to say there. And we have a lot of giveaways. If you want to go to jazzwealth.com/2023, there is Haley will send you a free download of all of the numbers you might want to know for 2023, all the changes that would happen out there. No strings attached, no marketing, no gimmicks. We won't sell your email. We're just happy you're paying attention, and it's our way of giving something to you there. So you remember our name, right? The shirt every day, right? Remember the name, the face. You get what we're doing here? We're playing the long game instead of buying a Super Bowl commercial. Anyways, let's get started. We'll do the S&P first. It was down about 0.7% last week. There is the S&P on the charts there. Materials were the best performing sector. I think it gained about 3.4%. Utilities was the worst performing sector. We're going to cover that a little bit more here in just a second. And for the most part, and I'm going to go over here, we'll use the SPX. This is how you look at the index itself. For the most part, the assumption by most analysts right now is that the S&P will finish the year at 4,000. In other words, they're not predicting much in the way of growth. So I don't know if that's kind of what put a damper on things here today, but nonetheless, that is some of the news you might want to know. The title of today's show is the glass half full or half empty? Because that's exactly where we stand right now. If I zoom in just a little bit for you, you can kind of see that the high of today was halfway between the low and the previous high. See it? I put the line there again. So it's known as a retracement area, Fibonacci area, however you want to look at it. It's about 50% of the prior decline. And the technical assumptions there are that this is the point where people don't know whether they should continue buying, sit and wait, or take a profit. And so you tend to see that when you get these little rallies back. You can see it right here as well. We had a little rally just about to a halfway mark between high and low. What happened? Little indecision, took a little time to work it off. You got the same thing here, little indecision, time to work it off. The same thing here, indecision. So it's not like something that just magically happened today and never happens. And that's where we stand. So what does it take in order to get the S&P to push past that, or to, just fall apart or go sideways, I guess, is something? It takes a catalyst. It takes some level of optimism to get us to continue to buy. It takes some level of pessimism to get people to want to sell and run away or do whatever it is they do. If there's no catalyst, then that's why you would get a sideways market. That's why markets chop around for a little bit until they find that next little thing they can hang their hat on and get excited about that. One way to verify this, just from a really, really high level view here, one way to verify this kind of nonsense, right, that we may be going into is to look at the relative performance of individual sectors. Remember, there's 11 sectors that make up the stock market, and compare that to the stock market. So we do like we always do here on Monday. We'll review this, and I want to point out something a little different here. So here's consumer discretionary. I hope you can read it. Financials, tech, industrials, and so on. Take a look here at consumer discretionary. If the line is going up, it means that that sector is currently outperforming the market. It is showing more strength than the market. If it's going down, it is showing less strength, meaning the market is moving along without it. And so this is just going back, right? We look here. Is there anything indicating that in the short term that this is the place to be? This is the sector where everyone's excited? No, nothing there. Financials, not bad. It's had a good run. But is there anything in the ultra short term, just going back through this here, kind of the beginning of the year, to suggest that financials are about to outperform? No, but you would argue, okay, it's sitting at highs. That's not bad. Tech, no. Industrials, yes. In fact, industrials is the sector that's closest to new 52-week highs there, which is odd given the slowdown in manufacturing. And you kind of look at some of the stocks that are leading the industrial sector. There are 69 of them, by the way. If you look at some of the stocks that are leading, it's like, what? If the economy is slowing down, why are you hitting new 52-week highs every single day? Not to mention reporting great earnings. I'll point out Rockwell Collins, or Rockwell Automation now they call it. New 52-week highs, running away, showed earnings that beat on earnings, sales, and guidance. They raised guidance. So this type of stock is leading the way over in the industrials. It's not exciting. It's not the airlines, right? You don't get as excited at these other names. You like looking at airlines, but that's what we have there. That's the focus. Then you have energy, nothing going on there. Materials, yes. Wow, it's the boring sectors, industrials and materials. Real estate underperforming, utilities underperforming still. Communication services, nothing. Healthcare, nothing. Consumer staples, nothing. So right now, when you go back a second, you say, well, you know, the market didn't do a whole lot today, and it seems a little bit sluggish in here. Now you know why. Broad buying on Friday, but other than that, not much to, like I said, hang your hat on and get excited about. It's just not there for you. If we look even further, we can go into the industry groups. And you know what that means? You have the S&P, which breaks down into sectors. There's 11 of them. Then there's a ton of industry groups, just kind of fine tuning there. So what I did is I did a little extra for you here, breaking it down into the industry groups so you can now zoom in a little bit further and you say, well, if it's industrials, where do I look? If it's materials, where do I look? What stocks are moving it? Well, that you may be more interested in what stocks have the biggest say in that area. So what we have here is, for example, automobiles and components. Tesla pretty much is automobiles and components. It makes up 77% of it. Where Tesla goes, the industry goes, right? And we got some news on that as well coming up. So now you can look even further and go, oh, semiconductors. Well, okay, semiconductors are kind of led 28% or 29% by NVIDIA. So, is it just that stock from their earnings and everything that's pulling things up? Retailers, Amazon is the biggest weight on the retailers at the moment. This helps you kind of zoom in a little bit. We won't go through all of them for you, but kind of wanted to highlight that. And I've got one more for you. If you want to look through capital goods, some of the energies, foods, and more on the staple side. If you want to look at materials, oh, here we go. There's materials. What's causing it to outperform? Well, we've got these three stocks that make up almost, over a third, right? Yeah, over a third for sure of materials. So if you were to go look, would you think that those stocks are doing it? There's Lind. Right, so it's not necessarily about knowing which stocks are outperforming. It's also a focus on which stocks are heaviest in that industry group, and then that narrows your search, right? Because chances are you just go look at those. If they're not moving higher, then that industry's not moving higher. But we go over here and we say, we know the industry's moving higher. So it must be those three stocks, or at least accounting for some of it. It could be a broad rally as well, but if you're making up, let's call it 20%, Lind anyways, 20% of materials, that stock better be going higher if it's going to move materials higher. And you could see that's one of the bigger contributors towards the action that we've seen here. Also want to point out here just something else. U.S. sales versus international sales. I pointed this out before. Got a few good questions on it, so I'll elaborate just a little bit. What I'm plotting here is a portfolio of equal weighted stocks that have less than 50% of their sales coming from the United States. Greater than 50% of their sales coming from the United States, or greater than 50% of their sales coming overseas, right? And we've talked about this in the past about the dollar having an impact on that. So you could say it the other way. These guys have less than 50% coming from in the U.S. These guys have less than 50%. You could say it either way, but don't let me confuse you. In the world of U.S. sales, companies who derive most of their sales from the U.S. Consumer are not doing as well. You could look at that and say, that's a pullback I'm interested in exploring a little bit more. Or you could look at that and say, the action's not here. I'll go over here. I want companies that have more than 50% of their sales exposed elsewhere than the U.S. So a different way of breaking it down for your Monday. Hey, the NASDAQ's going to say the exact same thing here. You're at that 50% level. You have no reason for, we have an argument, essentially. Is the glass half full or half empty? And you have people on both sides, so that needs to resolve itself there. The tech sector, we're going to expand on this probably tomorrow. We have, now I don't have it here, but the 50-day, which would normally be my blue line, and I don't know why it's not there, is crossing above the 200-day, and that's a meaningful thing for technical traders. So we'll explore some of the stats that revolve around that tomorrow. Does that matter? Should you be interested in that? And what's the forward performance? More importantly, you know how I normally do it. We say if there's some technical event or something that happens, does that mean outperformance for the sector that would be greater than it would have already averaged anyways? Or is it just going to blow your doors off and you're all excited about it? So we'll cover that tomorrow. The Dow hanging in there ever so slightly off the 200-day moving average and a little bit more convinced. However, we're still at that halfway point. You see where we're at? It's a very easy thing to, sound smart in front of your friends and go, the glass is half full or half empty. What do you think? You can't give us an answer in the short term because, well, we just don't know. Crude oil a little bit higher here today. I can't tell you whether to buy something or not to buy something, but I will use the phrase, a barrel in the hand is better than two in the bush. Or how do you say it? A barrel in hand is worth two in the bush, right? Oil back up to these highs here, getting stronger by the day. Hey, tonight on Jazz After Dark, we're going to cover a really weird change in how stocks are assigned to their industry group. There is a sizable change happening in the S&P and the Dow a little bit as well on what stock goes in what sector and industry group. They are changing this up dramatically. The change happens on March 17th. I am going to attempt to visualize that change for you and show you the impact. The tech sector will no longer have as big of an impact. Financials will have a bigger impact on the overall market. This is a big change that I just don't notice anybody talking about. It seems like it just quietly went on there. Think of what's going to happen. We have sector-based funds that have to make changes. We have index-based funds that really probably won't have to make too many changes. We have specific stock type funds, mutual funds and ETFs that are going to have to make changes. And that's going to create a little bit of mess in the markets because, remember, the markets move based on forward perception unless there's a reason that funds have to adjust. So if you're looking at the charts and you're going to go, oh man, the stock market's moving higher. Is it really moving higher because we're excited? Or is it moving higher because people had to shift stocks out of their portfolio or ETFs or mutual funds and move them into different categories because it no longer fits their objective that would be listed in their prospectus? So I'll oversimplify it. But tonight, if you're interested in Jazz After Dark, that will be what? Oh, tomorrow. It comes out tomorrow. Thank you. So tonight we're going to talk about why to take Social Security early. Thank you, Cody. And so I will have that. It will be posted tomorrow, Jazz After Dark. That'll be at 7 o'clock. Tonight's a good class too. We're talking about Social Security, and I'm going to go into Nest Egg, our planning software, to show you some examples in a little bit more detail there. Good catch. Good catch. Well, let's do it. Let's go. Stocks in the news here. There's not a lot today. So there was definitely not a lot because obviously it's Monday. That doesn't mean there isn't a lot going on, but today there wasn't a lot going on. We'll cover things that were. Here we go. Ciena. This is earnings, by the way, if you see the big pop here today. So better than expected on earnings. Sales came in better than expected. It broke above this, so you have both the fundamental reason to get excited, and then for a moment you had the technical reason. It did fade away a little bit, but this is a watch list stock. That could have just been part of the whole market selling off towards the afternoon and getting into the end of the day. I don't know that weakness is representative of the stock itself, maybe the market. So we have to come back to that. Altria very quietly gets out of their stake of Juul, what is it, the vapey thingy, the cigarette, but it's not a cigarette. Anyways, they got out of that deal there. I think not fast enough if you have ever read their earnings reports. Norfolk Southern, man. Another train derails, and by the way, in Ohio, so that's unfortunate. Nothing chemical or nasty in this one here, but they're like, we probably gonna have to put a new safety plan in place. And, I think a lot of people would agree. So that stock's down a little bit because safety plans involve what? Dollars. Yep, safety plans are expensive. That's the way Wall Street is looking at that. All right, fine, we'll talk about Tesla. So Tesla's cutting the price of their Model Y and Model S. Model S, 5,000, Model Y, 10,000. Now, okay, that's the headline. What's interesting about this? So Tesla has now cut prices on those two models by 14 and 21% just this year, right? Yeah, just this year. So what's interesting about that is what happened last time. So Tesla cuts their prices last time. They're now at this point down 14 to 21%. Ford came out and Ford said, we're going to match those cuts. What's happening to Ford? That stopped the entire rally and the 200-day, I guess you could say as well. But what's going on in this space that everybody's cutting their prices? Competition. You could say competition for sure there. Weaker demand could be an underlying factor. Why would we cut prices? There's less people buying. Let's incentivize them to buy more. And I would argue the wealth effect. Dollars are being sucked out of the economy right now really, really quick. You could probably see it. So we have less dollars available to an individual to go blow 100,000 or whatever these things cost on those cars. Now, the good news is that Mach-E, maybe we'll find out that Ford decides they want to lower the price of that. That's a good-looking car. I don't know. I think that's one of the best Tesla competitors out there. It looks-wise. I don't know, function-wise. I just see them driving around. But, hey, we'll see. All right, and tomorrow, just a handful of earnings coming out there. Casey's, have you ever been to these guys? They're popular up north. Used to go there as a kid, get my twin bings. Casey's has, unfortunately, a horrible record when it comes to performance on earnings. They are down 7 of the last 8. So I point this out because if there's a big move lower tomorrow, this entire pattern here with a large gap down, which is statistically probable at this point, that's a day trader strategy where they'll buy that up. So that'll be one of the ones that hits all the scanners and everybody will get excited about that. We'll see. Watch this be the time that they actually trade higher on that. All right, we had some great wine and wealth classes as well. We do those every week for our clients. We had Eric giving an overview last week to new clients to tell you how to expect, what to expect out of Jazz and how to get the most out of us. We did covered calls. We've done some cool tax videos on the difference between joint and individual accounts. We've done return on capital. We've kind of been going for some different classes here lately, and I hope if you're a client of Jazz, you enjoy it. If not, we're going to keep trying, man. We just keep going. In the meantime, I will pop this out, start trying to answer some questions if I can, and we'll see what happens there. Yeah, I don't know if you've seen those Ford Mach-E's, and I don't know much about them other than their looks, but right? Like, not bad, right? You think all cars should look more pixelated? That's kind of vintagey right now. That's really in with the hipster kids. Yeah. Pandemonium likes the options, classes, and the others. Okay, I like doing them too. Did we go to the Indy race yesterday? No, I knew a few people that went, but to me, that's a great reason to avoid downtown. I used to have an office downtown, and that was the most, I mean, it's a cool thing, but it was the most annoying thing to somebody that has to go down there and work. So it's in my blood. I just say, I'm going to stay away. Topic idea, pros and cons of a reverse mortgage. It's a great topic, actually. Yeah. And some of the tax laws have recently changed, wrapped around that. That could do. MD, how many employees are at your firm? People that actually work, or like how many employees? How many are there? 8 of us? 7? Are we counting you? Let's say 7, because I think there's 8, but I don't want to lie to you. So we'll say 7, and we manage just about $300 million. Yeah. How about you let Cody host the show? Keep asking for you, bud. You want to host the show one day? Maybe this Thursday? You have at it.
Listen, you want answers to if a hot dog is a sandwich or whatnot? I got you. Yeah, that'd be a great show.
Okay. It's just it'll just be, 30 minutes of talking sports and whatnot.
Yeah, sports talk. We can do sports talk too. Yeah.
What are your feelings about the Live Golf Tournament? How do you feel about Jake Gyllenhaal out there with the flying fake knee kick and all that?
Dude, our audience would love it.
They would love it. Yeah. In particular, Dave. So there you go. Yeah, we'll do it. Hot dog is a sandwich, which I think you agree with, right? Yes, yeah, Cody agrees. There you go. So he's already, they love you already, man. What do you think about adding long-term positions to CVS? CVS more than Bristol Myers, which isn't isn't today the day? Wait a second, hold on. Isn't today that, oh man. I think today, back in like 1899 or something, is the day that they came, which wouldn't have been them exactly, but them when they came out with the ultimate cure for a headache, aspirin. I believe that was it. Hot dog's a taco, man. Who's Dave Willis? Should I know that? I should.
Ray's radio broadcaster. Man, so sad. Was literally listening to him.
The mustache guy?
He was a play-by-play guy. I don't know if he had a mustache or not.
Dark
but great
hair?
radio guy. Passed away on Sunday morning.
Oh, the dark-haired guy? The main guy?
He's the play-by-play guy, yeah.
Oh. Okay. Good call, Victor. Yeah. Cereal's not a soup. Now they're getting carried away. Cody said, we'll talk about that. Cereals, don't do that. Oh no, now we can't let him go with it, man. Yep. Hey, what do you think about the Fed talk tomorrow? Do you think the big market mover won't say anything new? You know, I don't know. That has been, in all the weekend publications, that was the focus of this week. Next week, we'll get Fed Powell and his latest comments. I don't suspect he's going to change anything because you would have already seen the minions start to suggest the changes. I think it'll be continued tough talk. I don't see any shocks out of him, no. Oh, boy. Okay. Well, I'll let you guys debate the tacos and the soups and gazpachos and whatnot. I have to let my wife host. She's the foodie. Okay. Jazz After Dark, should you take Social Security early? We'll talk about that later. And then tomorrow we'll be doing the in my opinion, quite big changes in the S&P and in the industry groups and sectors as well. I'm going to sort of make it clear what's going on so that you'll know how things are changing and what the impact will be. That'll be a little bit geekier one. So maybe have some fun with the class tonight. I'll see you for tomorrow's class. You guys enjoy the rest of your evening. And that's all I got. See ya.